This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 3/14/22, show number 374, and it's that special time of the year again. Only happens 4 times a year, the quad witching hour.
That's right, Kerry. We got quad witch again. It's a quarterly options expiration. This time it's going to occur on Friday, which is the 18th of March, and again, that's where we call quad witching, which is 4 different asset classes expiring this week. So it usually makes for a very choppy, erratic week, sometimes volatile, especially in a lot of the popular stocks. What I always try to warn everybody is if you see a stock that's been soaring and roaring to the upside, look for a pullback, hence the oils, right? The oil stocks have been hot. Gold stocks have been hot. What's pulling back today? Gold and oil. So you always look for that. Stocks that are beaten down into the gutter, those are the stocks you look for bounces in. So you see that quite often, and then you'll get stocks that are somewhere in the middle, and they'll just be chopped around and whipped around because the small retail options trader has placed a bet, and once the large institutional trader can identify where that bet has been placed, they are going to move the strike price away from that area into options expiration Friday. So again, we call this pin the tail on a donkey. And it happens each and every month, but during a quad witch, it happens much, much more. And you have to be very, very careful. I like to call this the real Shark Week, as institutions have their way with the retail options traders.
Well, it happens. We see it over and over again, but this time it's more significant than most, isn't it?
That's right. It is definitely more pronounced during a quad witch or a quarterly expiration.
Right. So gold and silver getting a pullback, huh?
Yeah, gold is down pretty sharply today. If you take a look at the gold chart, that is down about 1.3%, 26-point drop on the futures. Right now, though, at 1959, I mean, gold has had a tremendous run. There's a lot of chatter out there that there's progress being made in Russian-Ukraine talks. It doesn't take much during an options X to pull gold back. Then again, on this coming Wednesday, we're going to have the FOMC. The Federal Reserve will conclude their 2-day meeting. Today, we have bond yields really catching a big bid higher. Yields on the 10-year are up about 10 basis points to 2.1%. And again, that usually can weigh on gold a little bit. So we're seeing gold pull back, but it's had just a tremendous run. It's been the ultimate fear trade, and it's been due to pull. It was overdue to pull back, I should say.
Right. All right, so that's what we're seeing now, and what do we make of the FOMC?
Well, they're already scheduled to raise rates by a 1/4 point on Wednesday. Basically, a couple weeks ago when Jay Powell, the Fed Chairman, testified in front of the Humphrey Hawkins testimony, he said just a 1/4 point. He was very, very specific to say just a 1/4 point hike, and while many people were looking for a 1/2 point, it's just going to probably be a 1/4 point. So a lot of that is baked into the cake. But I think right now we are starting to see yields go where they should, and they should go higher anyway. So the 10-year, I think, in my opinion, is headed up to around 2.3%, and then ultimately 2.5%. The 30-year, much higher than that. Right now, that's at 2.45%. So yields are definitely on the move. We're going to see the Fed. They've already cut their bond buying asset purchase program last week. So again, the markets are going to be driving themselves without training wheels now.
Wow, that's pretty amazing. So Chinese stocks, they're getting slammed as well, aren't they?
Yeah, Chinese stocks have been getting slammed for a while now. It's actually been months. And if you take a look at the market leader, which is Alibaba, that is down another 7% today. Believe it or not, Alibaba is now an $80 stock. It was actually trading below 80 this morning. And again, there's a lot of talk right now that these stocks are all going to be delisted in about less than 3 years. And that is what the Chinese government wants. And then there's reports of a huge COVID outbreak in China And that is certainly not helping these equities today. So it's quite something to see.
Yeah, that's remarkable. Well, I guess we're going to see what happens. What's doing with the cryptos?
Well, the cryptos right now, I mean, for the most part, are hanging in there. So today, if you take a look at Bitcoin, it's basically flat, trading at around 38,800. Overall, though, when I look at the current pattern in the cryptos, and I'm always tracking Bitcoin futures for all the listeners, it's not a very strong pattern. Still a lot of resistance around the 45,000 level, which happens to coincide with the 200-day moving average. That area was touched basically in the beginning of March 2nd, and it really has pulled back from there. And right now you're sitting, just below the 39,000 level. But overall, I don't see anything all that strong for the cryptos right now. I think they're going to just be range bound for the near term. And then I'll be watching to see if some kind of pattern forms, either bullish or bearish. Right now, I would lean more towards the bearish side.
Mm-hmm. So it's kind of, it's looking weak, but it's indecisive, but you think it's looking more towards the weak.
Yeah, I do, because when I look at the bigger time frame chart, really cryptos have not really gone up with any kind of strength. They've only gone up with minor upticks, and again, that's usually not a sign of a much more robust move in the making.
All right, I guess we'll leave it at that. Hey, in any event, we'll be ready for the rest of the week. If we can do the show, we will. Just make sure you go over to Nick's site, inthemoneystocks.com. See how he's beaten the averages for decades. Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Emails welcome at KL@KerryLutz.com. Nick, we'll talk to you probably next week, but maybe later in the week if something significant happens.
Sounds good, Kerry.